Good afternoon, you're watching us here on Midcap Radar. I'm Manglam Malu, with me Vivek. Today there was a recovery for the markets. From there it seems like it's sold into. Let's see what happens in the last couple of hours of trade. But suffice to say, we're out of the woods, but perhaps not quite out yet.
Well, you're absolutely right. The good part is, the initial sell-off that we saw, that was something that got bought into, and I think that will give some bit of a relief to the bulls. But like you mentioned, it'll be very important to see, whether that can be sustained in the last hour of the session. But right now, we have a management on our show. Let's now focus on Pyram Pharma, which is surging today on the back of a strong Q4 earnings. Their revenue saw an 18% increase, while margins are also at multi-quarter high. Our colleague Ekta Batra spoke to Nandini Piramal, the chairperson of the company, on their Q4 performance, and began by asking about innovation spending in FI25 and the biotech scenario in the US. Listen in.
Overall, at a PPL level, we're guiding for early teens growth in both revenue and EBITDA. As you mentioned rightly, the biotech funding has been difficult. And if that improves, which we hope at the end next, maybe second half, that will be an upside for us. We've also seen that our innovation-related business for the first time last year in FY24 crossed 50%. And our hope is that, and our intention is we should see that grow faster than the generic business.
Okay, all right. So the innovation piece is probably going to grow faster than the generic piece. That's interesting. I was going to get to your guidance a little later, but I'll address it now. Revenue and EBITDA growth to be in early teens. Besides CDMO, what are the other key growth drivers?
So our India consumer healthcare should be growing faster. And our CHG business will be slightly muted in terms of EBITDA growth. And the reason is we've got some certain regulatory and tech transfer spend that will have to happen this year so that we can see good medium-term growth.
Okay. So when you said biotech funding, if in case that scenario improves, what is the upside to the guidance that we could probably expect?
I think we'll have to wait and see. Right now, I would honestly say while biotech funding has improved in the first 3-4 months of the year, it's still too early to be a trend. And I think we'll know more at the second half.
Would it still be in the teens, or do you think that it can push up growth to say even the early 20s?
No, I think we'll keep to the teens.
Okay, we'll keep to the teens. The other key point which stood out this quarter were the margins, which have improved to a multi-quarter high of around 20-odd%. What is the guidance for FY25, considering that there are these non-reoccurring expenditures that you have alluded to in the complex hospitals generics business, as well as expenses for medium-term growth?
So we have improved EBITDA, as we've seen over the year and over the quarter. The reason is it is a fixed cost business, so higher revenue actually translates to better operating margins, as well as we've been paying a lot of attention onto cost optimization and operational excellence. So each of these, I think, has helped contribute. For over the next year, we're saying we're going to keep to an early teens growth in EBITDA for over the full year.
What would margins be? A range?
I think we'll say about, pretty much about the same or maybe a little bit better.
Okay. And your eventual margin guidance is 23 to 24%. When do you envisage that to take place by?
I think in the 3 to 5 year time frame.
Okay, so not in the near term at least.
No.
All right. What are the opportunities in the antibody drug conjugate space that you are seeing?
So this is, I think, a very exciting space, and we've actually been one of the few players that have been doing conjugation for a long time. We've been in the business, and so across the board, we've actually done a lot of work in development and commercialization. Last year, we actually opened our expansion to do more commercial scale. And what we've seen is over the last year, people used to, go to separate places for commercial as well as antibody or the payload. Now people are looking at integrated offerings. So last year, actually, we had our first order that actually combined all 3 steps, the mAb, the payload, as well as the conjugation and the fill finish. And we think that's a trend that will continue, and we are well positioned to meet that trend.
Okay. You seem to be cautious on the complex hospital generic space. While there could be costs, there was also some amount of pricing pressure. I do understand in one of your key products, there was a price cut which took place. What was the extent of the price cut? Do you expect this price competition to continue?
So in a generics market, there will be price pressure always. But the benefit in the complex hospital generics is you have multiple year contracts. And because we sell in 100 countries across the world, kind of these contracts will keep renewing. So there was some price pressure. We expect some of it to continue. I think that's part of the name of the game, but we'll continue to add new products. We have a bunch of products that are under development. And so between that and our cost optimization and margin enhancement, because we're vertically integrated in the inhalation anesthesia, we should see benefit. We should be able to maintain margins at least.
Well, just, focusing on the debt as well, because the company's guidance includes a further improvement in debt ratios. You've improved it to around 2.9 times. Total debt is down to around 3,932 crores. Where does it go from here in FY25?
See, as we said, we'll see an absolute improvement in EBITDA in the numbers, and we will repay some debt, and we'll actually look at reducing it further. I don't have an exact number for you, but the direction is a reduction of net debt to EBITDA.
Quickly then, Nandini, before we let you go, just wanted your thoughts on the Biosecure Act in the US. It is expected to be beneficial for India and especially for companies such as Pyram Pharma. What is the impact? How much do you expect it to be beneficial to you? Are you seeing queries come through already on account of it?
So the Biosecure Act, as your viewers know, hasn't yet been kind of made into law. And if it does get made into law, I think it will depend on what is actually part of the wording and how much of a transition period that they give for people to move products. But I do think some customers are looking at new changing, so especially for new products. So we are seeing an uptick in RFPs.
Okay, so you are seeing some incremental queries come through.
Yes.
Do you expect it to turn into a tangible opportunity for Indian pharma in FY25, FY26?
Sometimes these things take a long time between sort of query to actually revenue. So I think we'll have to wait and see.
Right, guiding for early teen revenue growth as well as EBITDA. That's the management of Pyram Pharma. The stock doing extremely well, up 5% in an otherwise wobbly market. Now, as we speak, the Nifty is down about 100 points, a fair distance from where we were at the high point of trade. And the mid-caps have it worse as well. In fact, all through today's trading session, the mid-cap index was actually underperforming the front line end itself. So since we're talking about mid-caps and this is Midcap Movers, let's talk about all those mid-cap movers with Hormaz, who's standing by at the big wall. Hormaz.
It was the right word that you described, right? A wobbly session, right? You opened far lower, now you've recovered, and then you're back heading downwards again. So start off with some of the losers, and real estate is taking a beating again. Prestige Estates is down 4%. Suzlon, shipbuilders are not having a good day today. So Mazagon Dock, Cochin Shipyard, both of them trading with losses of almost 4%. And as is Praj Industries now trading with losses of 4.5%. Plenty of earnings came out over the weekend and after Friday market close. We just heard the management of Pyram Pharma. The stock is off the highs of the day, but still trading with gains of 5%. BEML is the one though, 13% higher, but still significantly off the highs, or the record high though. It's still away from those levels. Dr. Lal Pathlabs, the brokerages are mixed there, but still 6.5% higher. And Bank of India, the reaction to those earnings, they're 11% lower after the results. Some stocks are a 52-week high. ABB India, the standout earnings possibly for the day, that is at a 52-week high, 10% higher there. CG Power and Polycab also trading with at a 52-week high, as was Havells, but that has cooled off from the highs of the day. Some stocks that are gaining on the back of volumes and losing as well. Sirma SGS, though 17% lower at one point, is the trading with heavy volumes there. Siemens and Hindustan Zinc also 5 to 6% gains there on extremely strong volumes. And lastly, some stocks that are bucking the trend in today's session. And Hitachi Energy, they're 6% higher. Welspun Corp, Tejas Networks and CEAT are some of the stocks that are seeing a bit of green in an otherwise red screen. Back to you.
Thank you so much, Hormaz, for that list of very good names, that are making the waves as far as the broader end of the markets are concerned. But let's now slip into a short break. When we return, we'll be joined by the management of CCL Products to discuss the quarter gone by. Stay tuned.
Welcome back. The stock on our radar is CCL Products. Now, you would look at their fourth quarter numbers and you'd say, okay, here's the company which has reported its revenue growth of almost 40%, but EBITDA hasn't grown in line and the net profit has too seen a decline. But, there are a couple of internals that need to be monitored. One, the revenue has grown apart from volumes, largely because of increase in the commodity price and increasing capacity. EBITDA for the company is largely locked on a per kg basis. So as a result of which, we do not see a concomitant increase in the absolute EBITDA, and the net profit, of course, impacted on account of their higher capacity and finance costs as well, which resulted in both higher depreciation and finance costs. So to talk us through the outlook for the company, we do have with us T. Chala Srisant, who is the Managing Director of CCL Products, joining us on our show. Chala, thank you so much for joining in. Always a pleasure speaking with you. So let's kickstart with the targets that you have for this year. In the fourth quarter, what was your volume growth? And what are you targeting for FI25 with all the capacity that has come on?
Yeah, so we had a total volume growth for the whole year at about 14%. We were actually impacted because of the roaster breakdown that happened in our quarter 2, which we had announced earlier. So we were not able to make up for that balance because of the higher coffee prices. But this year being a more normal year, again, we're looking at about a 15-20% volume growth. And only one uncertainty that is there right now is with the coffee prices going up so high, people are not willing to give more long-term contracts. They're working on a 2 to 3 months basis only. So this is one of the first years for us where we don't have normally we have about 85-95% of confirmed orders before the year starts. This is the first year we have only about 60% orders in place before the year started.
Okay, Chala, Vivek here. Also, you mentioned that there aren't too many long-term contracts in place for FY24. Give us a sense of the kind of contracts that you're getting into and what kind of revenue visibility do you have? The second question is, as far as EBITDA per kg is concerned, the key metric that we track, what is the outlook for FY25?
Yeah, so one, with respect to the long-term contracts, the different types of customers that we have, there are certain brands that place orders with us a year in advance, or sometimes even 2 to 3 years in advance. So that business is normal. So they don't really care about the fluctuation in prices. But a lot of repackers and resellers, these are companies that don't want to take too much of a risk. So whenever the prices are on the lower trend, or if they feel there's going to be a correction, that's when we start getting more orders from them. And the second question, can you just repeat once again?
What is the EBITDA per kg? What is it that you're guiding the street for?
Yeah, so the EBITDA per kg also is still the same. It's about 105 rupees approximately. And we are expecting it to be along the same lines, maybe a slight improvement because of the mix change that we're expecting this year. We're focusing more on small packs and on more premium products as well. But we're not expecting any drastic change in the EBITDA per kg. And volumes, since they'll increase, automatically the EBITDA, absolute EBITDA also will be increasing this year.
All right, so absolute EBITDA increase, EBITDA per kg closer to around that 100 rupees per kg itself. You spoke about small packs and premium products. What exactly is the contribution currently from both these verticals, and how much do you anticipate them to be by the end of, say, FY25 and early FY26?
So small packs and premium products, both put together, around 35% of our production comes from these two segments. We're increasing by maybe another 5 to 10% is what we are targeting this year.
All right. And your capacity expansion, you have existing capacity coming in from freeze-dried capacity coming in from Vietnam in the second half of this year. Where does your total capacity stand at right now? If you could give us a sense, and what's the capacity addition, both spray-dried and freeze-dried?
Yeah, so today our India expansion just got over in the month of March, and we are currently at around 71,000 tons. Our freeze-dried expansion should be completed by around August. Then we will be at 77,000 tons.
Okay, so capacity expansion in India you've spoken about. Give us a sense of how the London-based band's performance actually panned out. Earlier you said that you're looking at a target sales of close to 100 crore in the next 2 to 3 years. So is that on track or any changes over there?
Yes, we are on track for that. So the first year itself, we did about 12 crores of sale. And this 12 crore also is basically what we had done was we had taken over a declining brand and we focused on doing the transition during this first year. Now we are relaunching the entire brand with the new formulation, with the new artworks and everything. We are going back to basics. One of the insights that we got is that the reason for the brand decline also was the change in product formulation. So the product formulation that we originally came up with initially, that is what we are reverting to now. So we're expecting that volumes to start coming in going forward.
All right. And what about the domestic branded business? You had a target of over 200 crores for FY24.
Yes.
Where did that number end? And this year, what's the target?
So we were at about 210 crores this year for the domestic branded business. We are looking at maybe around 350 to 400 crores for the current financial year.
With EBITDA positivity?
Yes.
Chala, one more question from our end. You've mentioned quite a few of these points, but it'll be good to get clarity on all of them. Just reiterate for our viewers the FI25 guidance. You did say you're expecting volumes to grow in the range of 15 to 20%. So what is the volume range that you're targeting? The revenue? You said EBITDA is going to grow. So what is the EBITDA that you're targeting to grow? Margins and the bottom line?
Yeah, so the revenue growth will actually be dependent on the raw material prices, which are fluctuating and kind of all over the place. So one of the reasons why you can see the kind of revenue growth closer to 40% now is because the prices of green coffee have almost doubled. But in the last couple of weeks, they've started softening. There was almost an $800 correction that took place, which was in line with the new crop coming online. So if the markets correct further, then that revenue growth also will get accordingly adjusted. So revenue growth is something that we are not really very confident about giving a guidance on because it's fluctuating a lot since ours is a cost-plus model. The EBITDA growth is something that we are more confident about because it's directly linked to the volumes. And the volumes is what we're looking at, that 15 to 20% increase.
All right, final couple of questions before we let you go. Chala, if you could currently give us a sense of what your domestic market share is in the stores that you operate, so the addressable market, how much would that be? And secondly, on the balance sheet, because of all these expansions that you're doing, debt has increased as well. Where does it peak out? When do repayments begin?
Yeah. So as far as the domestic market is concerned, in South India, in especially AP and Telangana, we have almost 11-12% market share. This year, we are actually starting to target other states as well. So our market share is likely to increase over there. As far as the debt is concerned, this year actually is when we are expecting the debt to peak out. We were at about 1,600 crores last financial year. This year, we're looking at about 2,000 crores of debt. That's working capital of almost about 1,400 crores. And the balance is the long-term debt. But a little bit of restructuring that we're doing internally and optimizing our finance costs as well. So it's not going to be a significant impact on the balance sheet this year onwards.
Thank you so much, Chala, for joining us and answering all of those questions. When you're talking about CCL Products, a little bit under pressure today, but the long-term guidance, FI25 guidance, is quite strong. Let's now slip into a short break. Up next, we will put focus on Syrma SGS Tech in our Midcap Spotlight segment. Stay tuned. Welcome back to Midcap Radar. The stock that we are focusing on today, the company declared its Q4 results, Syrma SGS Technology. The stock has slumped over 15% in trade today as margin has disappointed in the fourth quarter. This is our special segment, Midcap Spotlight. Upasna will be focusing on the stock. Upasna, over to you.
Well, weak set of numbers reported by Syrma SGS. The revenue stood up by almost 67% on a Y-on-Y basis, and the strong revenue growth was mainly led by healthcare and consumer segment. But it is important to note the margins of the companies where the stress lies. The EBITDA margin is down almost about 220 basis points at 7.2% versus 9.4% on a Y-on-Y basis, and higher contribution from consumer business, higher RM cost of new customers and prevailing component shortage has led to the dent in the margins. Well, it is also important to know that the export revenues of the company has also come down from 28% to 23% on a Y-on-Y basis. Now coming to profit of the company, it's up just about 5% on a Y-on-Y basis, and in terms of FY24 numbers, the margins are also under pressure. They stand at 6.8% versus 9.5% on a Y-on-Y basis, and revenue is up about 54%. While the company says that the EMS continues to witness strong traction across industry verticals, and company remains confident and aspires to grow in line with the industry growth rate is what the company has highlighted. So all in all, we see a weak Q4 reported by Sirma SGS.
All right, that was our Midcap Spotlight. Just keep an eye on a couple of these midcaps which are doing well. Now the markets have again begun to rally. The Nifty is moved back into the green, and this one seems a lot more formidable because we have the Midcap index which is doing well as well. So the Nifty Bank is up 250 points. When we started the show, they were at the trenches, as you can see at around 130 on your screen, and now it's surged with the Midcap index having moved as well, and now virtually into the green for that index too. Spencer's Retail is doing extremely well. Cera Sanitaryware reported its numbers just moments ago. That stock too has moved to the high point of trade with a gain of about 4.5%. And D-Link is the other stock which has seen a big move, about 10% from lows, up around 13% right now. And the volumes on that have also picked up nearly 10 times what we see on a regular day. For D-Link India, that's the stock which is up around 13.5%, closing in on that 400 rupee mark for that stock with a fair amount of volumes. There you have that one. But among all of this, one of the stocks which is under pressure is Bank of India after reporting their fourth quarter numbers. Earlier today, we spoke with Rajneesh Karnatak, who's the MD and CEO of the company, on their FY25 outlook. Let's hear out what he had to say.
As far as the slippage ratio is concerned, we are targeting a number of around 1.20% for the slippage March 25 slippage ratio. As regards the gross NPA number is concerned, you have seen that the gross NPA has come down from 7% plus to 4.98%. We expect further it should be at around 4% in FY25. So for the guidance for March 25 would be on the deposit side 11 to 12% and advances side 13 to 14%. So the guidance for the financial year 25 is on the net interest margin side is that our net interest margin on a global level should be at around 2.95%, and this net interest margin on the domestic side should be at around 3.35%.
Well, amidst a very strong comeback that we are seeing across all of the indices, that's all the time we have on this edition of Midcap Radar. Your stocks when we return.